Welcome everybody, and this will be the last lecture for theory under the chapter pgbp. So till now, whatever sections, whatever things we discussed, all talked about that these are certain incomes. From that, these are the deductions which we have to deduct, right? These are the laws which we have to comply and then compute the income. And it was really tough for a layman, very a businessman who is just a new startup. For him it would be really difficult to go through all this. So for that there is certain solutions which we will be discussing in this video. But before that, let's start with the topic called as maintenance of books of accounts under section 44AA. Right? Hey, you're doing business, right? So you should maintain books. But how much books you should maintain, how many books you should maintain, that is answered in this. Now this answer which we are discussing is as per income tax. Then company law has separate answers, partnership act has separate answers. So I'm not talking about all of them. Okay, so let's start with what partnership has to say. Hey, income tax has to say. What income tax has to say. Now, assessees are divided into two parts: specified professionals and other assessees. So assessees are divided into what? How many parts? Specified professionals and other assessees. Now, whatever you can see on the screen, A and B both talk about specified professionals only. A, B both talk about what? Specified professionals. Now what it says, if suppose last 3 years turnover, last 3 years professionals, right? Gross receipts. Last 3 years gross receipts. Every year is more than 1,50,000. More than 1,50,000. Again more than 1,50,000. If gross receipts of each year exceeds 1,50,000 in the last 3 years, then you fall under category A and you required to maintain books which are specified under rule 6F. So what I said, are you a specified professional? The answer is yes. Your gross receipts in last 3 years is more than 1,50,000 each year? The answer is yes. Then maintain books of accounts as specified under rule 6F. We'll discuss that after a few minutes. Okay. Now, if you are a specified professional, but your gross receipts in any of the 3 years is not more than 1,50,000, then you need to just maintain reasonable books, right? Which will help the assessing officer to compute your income. Okay. Only reasonable books which will help the assessing officer to compute your income. That's it. Now come to C and D, compared. Okay, this is other assessees category, not specified professional. Other assessees are covered under C and D. What it says, hey, your income is more than 1,20,000, your turnover is more than 10 lakhs. If you satisfy this in any of the 3 years, hey, any of the 3 years, in the past, any of the 3 years, if you satisfy your income to be more than 1,20,000 and turnover to be more than 10 lakhs rupees, then you need to maintain reasonable books of accounts. You need to maintain reasonable books of accounts. But suppose in all the 3 years, you can see under D, if your income is less than 1,20,000 and turnover is less than 10 lakhs in all the 3 years, then you need not maintain any books of accounts. You need not maintain any books of accounts. Clear to all of you? Any doubt? Very good. But C and D has one more point to talk about. That is about individual and HUF. For individual and HUF, the limit is not 1,20,000, it is 2,50,000. So income limit is not 1,20,000 but it is 2,50,000. Turnover limit for individual HUF is not 10 lakhs, it is 25 lakhs. This you should remember. Right? Clear? Yes or no? And in all the A, B, C, D cases, one thing is common. If you are newly set up business, you cannot check last 3 years data, correct? But if you expect that your income or turnover will exceed more than the prescribed limits, then you have to follow the law, right? Suppose you are a professional, then you should maintain rule 6F as books as per 6F. If you are a business assessee in C and D, then you should maintain reasonable books of accounts, right? If it is expected that your income or turnover exceed that particular limit. Hey, again I am repeating for you A, B, C, D. A talks about what? Specified professional, right? And gross receipts exceeding 1,50,000 each year, 3 years continuously, more than 1,50,000, more than 1,50,000 and more than 1,50,000. Then maintain books as per rule 6F. But if it is not the case, then follow B. Maintain books which are reasonable enough to just compute the income by the assessing officer. Now, if you are not a specified professional, then come to C. Your income should be more than 1,20,000 and turnover should be more than 10 lakhs in any one, at least one out of 3 years. If yes, then maintain reasonable books so that assessing officer can compute your business income, right? If you are a new business, then at least if you expect that this will cross, then maintain reasonable books. But if you are an individual HUF assessee, 1,20,000 will be replaced by 2,50,000 and 10 lakhs will be replaced by 25 lakhs. Nothing more than that. But if in any of the previous years, last 3 previous years, you did not satisfy these conditions, then you fall under D, no need to maintain books. Then come to E. E talks about those assessees which are covered under section 44 AE, 44 BB and 44 BBB. Generally, they have some presumptive income. Now, if that presumptive income limit which is fixed by the income tax department, if you are okay with, then no problem, no need to maintain books. But if you say my income is less than that, then this E point comes and says please maintain books of accounts reasonable enough so that assessing officer can compute your income. Come to F, same, it talks about 44 AD subsection 4. If suppose 44 AD assessee, which we will discuss later on, if they say my income is less than this limit, then maintain reasonable books so that assessing officer can compute your income. Okay. Now you may ask, sir, you are talking about A, B, specified professional, C, D, other business. How to decide who are specified professional? Array, just see this list and remember. Okay. What it says, you are either a legal professional, medical professional, engineering professional, architectural professional, accountancy professional like CA, CMA, or a company secretary, or an interior designer, right? Or information technology expert, or a technical consultant, or any other specified by the board. Board means Central Board of Direct Taxes, okay, in the official gazette. You are a specified professional. And if you are not a specified professional, you are covered under other business. That's it. Okay, simple. Now I was talking about rule 6F and books of accounts. What are they? Arey yaar, you know in accountancy same books, your cash book, your journal, right, your ledger. If you are giving any क्या बोलते bill to any customer, then you should maintain a carbon copy of it, right? Arey original you will give to customer, right? So carbon copy you maintain. If the bill is 25 rupees or more, you should maintain carbon copy of it. Okay. Now this is totally outdated because of the digital ecosystem, but still law is there, so we are discussing. That's it. If you are receiving something, right, receiving invoices because you purchase some goods, so you will get invoice. Maintain original invoice. If the invoice value is more than 50 rupees, then maintain original invoice. Suppose if it is less than that, then at least payment voucher. At least payment voucher signed by the seller, right? You have to maintain. So what I said, as per rule 6F, simply cash book, journal, ledger, you have to maintain, right? If you are giving any invoice to your customer, carbon copy for all the bills which are having more than 25 rupees value. If you are receiving some invoice, then you should maintain original invoice, and if it is more than 50 rupees, original invoice. Less than 50 rupees, at least payment voucher signed by the seller you should have. Clear? If you are into medical profession, then you should maintain daily case register. How many patients visited, at what time they visited, their phone number. This is daily case register you should maintain as per form 3C. Okay. And you should maintain the register of inventory, where what are the drugs you have, medicines you are giving, then the consumable accessories, right, which are used in the profession. All these records you should maintain if you are into medical profession. Simple. This is what you should remember. Now if you don't follow this section 44AA, then penalty, definitely. How much? Penalty is 25,000 rupees. How much penalty? 25,000 rupees you have to pay penalty. Okay, now come to section 44AB. This is tax audit. Arey yaar, if you maintain accounts, then automatically audit comes, correct? So when audit is required? So I have created, or books has created 5 different cases. First case, if you are a business SSC, right? First case, you are a business SSC. Then if your turnover exceeds 1 crore, if your turnover exceeds 1 crore in the previous financial year, then you have to compulsorily do tax audit. A chartered accountant will prepare the tax audit report and submit it. Okay. Now, if you are a businessman, but you are covered under 44AD subsection 4, you want to claim lower income, right? Lower income. Oh, sorry. If you are a 44AD SSC, then you need not do any tax audit, even if your income is more than 1 crore. Even if your income is more than 1 crore, no need to do tax audit. But if the income is up to 2 crores. So if you are an SSC covered under 44AD, then even if your income is more than 1 crore, no need to do tax audit, only if your turnover is less than 2 crores. Simple as that. One more situation will come, that you are covered under 44AD and you are saying that my income is less than the particular limit, right? 6%, 8%, I'll tell you later on. But if it is less than particular limit you want to claim, then definitely you should not only maintain books of accounts as per 44A, but do tax audit under 44AB. Right? Okay. Come to the next part. If suppose you are a business SSC and your income is more than 1 crore, you are covered by tax audit. Sir, we know this, sir. But one case, even if your turnover is up to 10 crores, no need to do tax audit. If all your receipts are digital, all your payments are digital. So at least 95% of your receipts 95% of your payments or more than that are through account pay check, ECS or demand draft, then up to 10 crores turnover limit also, no need to do tax audit. Clear? Very good. So first point is clear to all of you. Hey, what businessman tells, simply if your turnover is more than 1 crore, you have to do tax audit. But if you are a 44 AD SSC, even if it is more than 1 crore, no need to do tax audit if your turnover is up to 2 crores. If you are a business SSC whose receipts and payments at least 95% are through account pay check, demand draft or ECS, then up to 10 crores turnover limit also you are not required to do tax audit. If it is more than 10 crores, yes. Second point, if you are a professional, I said na, legal, medical, engineering, then I said architectural, chartered accountancy, cost accountancy, company secretary, interior designer, film artist, right? Any other specified by the Central Board of Direct Taxes in the official gazette. You are a professional and your gross receipts exceed 50 lakhs. Then you have to do the tax audit. Gross receipts exceed 50 lakhs, tax audit is mandatory. Okay. Come to the third one. If you are an SSC covered under 44 AE, 44 AE, 44 BB, 44 BBB, then what the government says, that you want to claim lower income than the specified. Lower income than specified as per the sections. Then you have to compulsorily do tax audit. Right? Come to the fourth point. If you are an SSC mentioned under 44 ADA, so you are a professional. Government simply says that 50% of your receipts will be treated as income. No need to claim expenditure as deduction, nothing. Simply 50%. Very good option for professionals. But if they say, no, my income is not even 50%, boss. Under the fourth point, section 44 ADA, not even 50%. Sure. Then maintain books of accounts. Under 44A, do tax audit. Under 44 AB, right? But only thing they mentioned here is your income should be more than the basic exemption limit. That means more than 2,50,000 rupees, right? And the fifth point says very simply that if you are covered under 44 AD subsection 4 and you want to show that my income is less than the percentage like 6%, 8%, not only you need to maintain books of accounts but also do the tax audit. Okay, this is what the whole concepts are. Suppose you are required to do tax audit, by what time it should be submitted? At least 1 month before the due date of filing returns. Suppose for companies the due date is 31st October. Then till 30th September they should file the report, tax audit report. Who should sign? Chartered accountant should sign. If it is not done, then penalty. Yes, penalty. Half percentage of the turnover. Half percentage of turnover. Or rupees with 1,50,000. Half percent of turnover or rupees 1,50,000. Whichever is higher, you have to pay penalty. Sorry, lower. 1,50,000 or half percent of turnover, whichever is lower, you have to pay penalties. Right? This way you should remember 44 AB. Clear? Very good. Now let us start section 44 AD. Very nice section actually. Suppose you are a businessman You don't know any education, you don't have any education, you only know make the goods, sell in the market. Now for you to maintain books of accounts, get it audited, all that headache, will you be able to manage? So for all such businesses, the presumptive taxation scheme under 44 AD is applicable. Now who should be that assessee? This section is applicable to resident individual, resident HUF and resident partnership firm. Chalo, come on, repeat with me to whom it is applicable. Resident individual, resident HUF and resident partnership firm. Now they gave the list of 5 people to whom this section doesn't apply. Now to LLP, Limited Liability Partnership Act, partnership, LLP, Limited Liability Partnership, this section doesn't apply. Obviously to companies this section doesn't apply. Now if you are an assessee who is a specified professional mentioned under 44 AA, we discussed it, remember, legal, medical, architectural, the list, to them also this section doesn't apply. If you are a commission brokerage person, you are earning income on commission brokerage, this section not applies. If you are into agency business, this section does not apply. If you are into plying, hiring, leasing goods carriage vehicles, which is already covered under 44 AE, then this 44 AD does not apply. Now, to whom it is applicable? Resident individual, HUF and partnership firms. All should be resident. Then only this section applies. But if it is LLP, company, specified professional under 44 AA, persons engaged in commission and brokerage income who are into agency business or plying, hiring goods carriage vehicle under 44 AE, this section doesn't apply. Now if you want to be covered under this section, what conditions you should satisfy? First thing, you should not be covered under these 5 businesses, right? If you are covered under these 5, you are out. This section doesn't apply. So not covered under the above 5. Turnover in the previous year does not exceed 2 crores, right? Turnover means sales. Do not exceed 2 crores. Turnover do not exceed 2 crores. And you don't want the benefit of section 10 AA, 80HH and 80 RRB. Now what does this mean? We'll discuss in the respective chapters. Section 10 AA is such a related benefit, special economic zone. 80HH, 80 RRB will discuss in that respective chapter. HH is anyhow not there. Right. What is the next thing to remember? If your receipts are through account pay check, ECS electronic clearance system, or through demand draft or any other electronic mode, then whatever your turnover is into 6% is your income. But if your turnover is other than these modes, sometimes you may receive crossed check, sometimes you may receive bearer check, sometimes you may receive cash, right? In all these cases, turnover into 8%, right, will be treated as your income. So whenever you get a question, they will give you sales list, right? Sales, you received the money through account pay check, okay. Sales, you received money through demand draft, okay. Sales, you received money through electronic mode, okay. NEFT, okay. RTGS, okay. Total all such sales and multiply with 6%. Second part is, if it is not covered under this category, then simply multiply with 8%. That's it. you got your income, right? Total these two items, your income is now ready. Next thing to discuss, if you want to declare higher income, government will be very happy. Arey yaar, you declare yaar, welcome, very good. You can declare higher incomes. Now, when they simply gave such a simple system, right, where you have to take all the incomes, right, from that deductions, disallowances, all that headache, and where this simple system straight multiplication, right? But for this simple system, you cannot claim deduction of expenses, right? Section 30 to 37 will not be applicable to you. Depreciation you cannot claim. But the point is, you should calculate the WDV, opening WDV, add purchases, minus sales, closing WDV, from that depreciation should be deducted, then calculate opening WDV. All this should be done. It's a mandatory thing. I feel you understood what I tried to convey. Now, come to the next part. Can you claim deductions? So once you get this income, you will include income from house property, capital gains, other sources, aggregate all that. You will get gross total income. From that, you can deduct deductions under chapter 6A, right? But you cannot claim deductions of 10AA, 80HH and 80 RRB. Okay, simple as that. Sir, brought forward losses, can we adjust? Arey yaar, why you cannot adjust? You can. Once you get the income, from that whatever brought forward losses of past years are there, you deduct it. No problem at all. Suppose you want to, actually this is special way of computing the tax or your income. The regular mode we discussed in all the last lectures, and this lecture is talking about special mode. If you opt for this special mode, for the next 5 years you should stick to this mode only. But suppose if you switch in between, you want to calculate income on normal mode, not this 44AD, then for the next 5 years you should stick to that normal mode only. Next 5 years you should stick to that normal mode only, regular mode only, right? This way you should actually compute your income under 44AD. The provisions whatever are applicable we discussed, right? Advanced tax provisions, yes, are applicable to this section. So if you compute income under 44AD, definitely advanced tax provisions will also apply. Okay, so I feel we covered everything. 44AD done. Very good. Now we need to refer section 44ADA. Suffering a bit with throat issues, so I am going slow, though we are discussing about professionals. Now what they spoke about, this section is applicable only to resident individual and only to partnership firms. Okay, so this is not applicable to LLP. It is applicable only to resident individual and to resident partnership firms. Okay, so they should be engaged in a specified professional work like legal, medical, architectural, accountancy, company secretary, interior decorator, film artist, or any others notified by the Central Board of Direct Taxes in the official gazette. Okay, now come to the next thing. The income would be 50% of the gross receipts. Whatever receipts are there, into 50% will be income. Now once you opt for this scheme, then you have to forget deductions under section 30 to 37. So section 30 to 37 deductions you will not get. Depreciation as a deduction you will not get. But depreciation you should calculate so that you can value the WDV. The value of the block you should calculate, right? Opening balance, add purchase, minus sales, closing balance of WDV. From that depreciation will deduct so that we can calculate opening WDV. And this should continue every year, right? For that we will calculate depreciation. But for income computation, depreciation is not deducted. Then deductions under chapter 6a, that is 80C to 80U. These deductions can be claimed. No issues with it. If there is any brought forward loss of previous years, once you compute the income, right, income, after that you can deduct this brought forward loss also. No problem at all. What's there in it? Now, there are certain professionals who may say that my income is lower than the 50%. Why should I pay more tax? No problem. You please maintain the books of accounts as per 44AA. Please do the tax audit as per 44AB. Maintain the books of accounts as per 44A. Do tax audit as per 44AB. If your income is more than the basic exemption limit. If your income is more than the basic exemption limit. But sir, tax audit can be done only when the professional's gross receipts are more than 50 lakhs. That will not apply. You are covered under 44 ADA. You took the option of 44 ADA and you enjoyed the benefits for years, and now you want to show income less than 50%, then government don't trust you. So they say, okay, you claim lower income, we give fair opportunity to you. But only thing is, if your income is more than basic exemption limit, then you should not only maintain books of accounts, but also do the tax audit. I'll give you one more special thing to remember. 44 ADA is one section where you can change the option every year. So this year you want to opt for 44 ADA, okay. You want to opt next year for normal provisions, okay. Next year you want to go for 44 ADA, okay. So no problem at all. This is what all about section 44 AD. Again for reference, to whom it is applicable? Resident individual, resident partnership firms. Not to LLP, not to company, not to HVF. Then what they said, simply it is applicable to professionals, which we discussed. Turnover, gross receipts should be less than 50 lakhs. Income is whatever turnover, gross receipts into 50%. 30 to 37 deductions, no. Depreciation, no. But WDV computation should be done. Okay. So depreciation for income computation, no. Depreciation for WDV computation, yes. We have to aggregate all the heads of income and claim deductions under chapter 6a. Brought forward losses also we can adjust. If you want to claim lower than the 50% limit, then you should maintain books under 44AA and tax audit under 44AB. If basic exemption limit income is crossed. And finally what they said, that this option you can change every year, right? This way we should understand 44ADA. Now let's go to 44AE. Now income from plying, hiring, leasing goods carriage vehicle. Section 44AE. What is this? Are mai nikla gaddi leke. Have you heard of that Gadar song? Right? Sunny Deol was the hero. So these people who are into goods carriage, goods transportation through road. For them, this section is there. Now, for these people, imagine that they have to apply all the complex income tax concepts and then compute the income. They will not be able to. Government said, "Arey, we have a simple system for you." Chalo, what is the simple system? Simply any SSC, whether it is company, partnership, HUF, no problem at all. Whether it is resident, non-resident, are no problem, yaar. Right? This is what government said. So this section is applicable to everybody, anybody, right? Now the vehicles should be not more than 10. So total number of vehicles should be 10 only, max 10. Okay. It includes small and heavy, both. So but it should not be more than 10. Pakka? Right. Now if you have purchased some vehicle on hire purchase basis, installment purchase basis, both are covered here. Sir, we did not even pay single installment. Arre, still it is included, yaar. So, if you have purchased the vehicle on higher purchase basis, installment purchase basis, both are included. Okay, even if you have not paid a single installment. Now, what is goods carriage vehicle? One is the lorries which are actually constructed for goods carriage. Second, sometimes some vehicles are not constructed for goods carriage but are used for goods carriage. So they are also goods carriage vehicle. Suppose a bus is there which is created for transportation of passengers. But if it is later on used for carriage of goods, then it is also goods carriage vehicle. Clear? Right. Now, what is the income? How to determine the income? Rule is very clear. Is it a heavy good vehicle? Now, heavy good vehicle means it takes the kilogram of how much? 12,000 kgs. So, if its weight is 12,000 kgs or more, then it is heavy goods vehicle. Okay. Gross vehicle weight is more than 12,000 kgs, then it is heavy goods vehicle. Now some vehicles may have weight of 20,000, some vehicles may have 30,000, some vehicles may have 15,000, correct? Anything is okay, but it should be at least 12,000 kgs weight or more. Now can I use the word, because 1000 kgs is equal to 1 ton, correct? So can I use the word 12 tons for your reference? Right? Now, if it is a heavy goods vehicle, whatever its capacity is there, into 1000 per ton. Suppose the vehicle which is given in the question has 15 ton capacity, then into 1000 rupees, that means 15,000 would be income per month, right, of that vehicle. Now how much it actually earned or did not earn doesn't matter. When you opt for this scheme, simple, 1000 rupees into your vehicle capacity, that's it, income is decided. But sir, our vehicle weight is 10,000 kgs, only 10 tons. So we can say it is not heavy good vehicle, it is coming under others category. So then 7,500 rupees per month. Now this is not per ton, please. 7,500 per vehicle it is. Okay, that's it. 7,500 per vehicle per month, if it is not heavy goods vehicle. Clear to all of you? This is how you should compute your income. Now please remember, if you hold the vehicle in a month for single day also, this income will be calculated. Okay? No, I did not use the asset, I did not use the vehicle, still the income would be calculated. So usage or no usage doesn't matter for the government once you opt for this scheme. You have the vehicle, that's it. Your income is fixed. Okay, this way you should be able to understand. Now, what is the usage or not usage doesn't matter. Okay, now come to the next thing. Can we claim deductions under section 32, 37, 38? No, you cannot. It is assumed that you already claimed the deductions. Okay, so you cannot claim deduction again. Sir, can we claim depreciation for computing the income? Absolutely no. But depreciation should be used for computing WDV of the blocks. Sir, under section 40B, partnership remuneration, partners interest on capital, can we claim that as deduction? Absolutely yes. You can claim that as deduction. No problem at all. Right? By the end of this chapter, you will understand what is 40B in detail. Okay? Now, again I am repeating for you in simple language that section 30 to 37 deductions not available. Right? Then second thing you should remember, depreciation for income computation not available. But depreciation should be used for computing the WDV. Section 40B deductions for partnership interest and remuneration. Okay, yaar, you can claim. Sir, we want deductions under chapter 6 80 deductions. Okay, 80 deductions you can claim. Right? You take income from other businesses plus income from other sources like salary, house property, capital gain, other sources. Do the total of all the incomes, get gross total income. From that, these deductions under chapter 6A or 80C to 80U, you can claim. No problem at all. Sir, brought forward loss. Arey, no problem. Last year's losses you want to deduct? Okay, take it. Claim the deduction. One thing is very clear, that if you file the income tax return under this section, that is 44AE, or even under 44AD or 44ADA, then you need not maintain the books of accounts. Under section 44A, you need not maintain or do the tax audit under 44AB. But suppose if you want to show lower income, right? You followed this section 44AE for some years and now you want to show lower income, that my income is less than that, then definitely you should maintain books of accounts also and you should do tax audit also, irrespective of your income limit. Sir, my income is less than basic exemption limit. Doesn't matter. If your income is less than basic exemption limit also, you have to get the books of accounts audited and books of accounts maintained and also audited. The best part of this section is every year you have the option to switch to regular mode of computing income, and you can always come back to this also at your choice. This way the whole provision is covered and I feel that you understood all this. With this we completed section 44AE. In the next lecture we'll solve some problems. Okay, chalo, bye everybody, take care for this lecture.